and get started. Just to let you all know, our webinars, as always, this is recorded. And as I'm talking to you, I'm seeing continued registrations. The people are probably going to be chiming in here because I've literally just had like 4 notifications, which is okay. I'm just glad that they're jumping on and getting the information. So welcome. This is our webinar 2. Remember, we were doing 3 webinars as a continuum for our live in-person currency conversations here in Atlanta that we had. I think it's been about a week now.
Yep.
I don't know, it's all a whirlwind, but it's just the response, the feedback has been overwhelming. So I want to thank you all for the way you showed up for yourselves on that day and the way you're continuing to work together on this. And so we have a very special guest, Michelle Curtis Chapman, who's the VP at Chase Bank at the Edgewood branch here in Atlanta. And Michelle has been such a gem and so just selfless with her knowledge, with her wisdom, with her resources and her time on a Monday night here to get on and just share very quickly. And so if you're catching the replay of this, or if you were not at Currency Conversations, Michelle Curtis Chapman joined us as a panelist, and she so openly and heartfelt shared her story about just how life can occur. Life can happen, and a financial crisis could just take place in the moment of a medical issue, a life decision. I mean, it can happen to any one of us. And she said, I think probably the quote of the day, which I did post about this week, which was to forgive yourself. And the crowd just all sighed. It was one of those moments I could not recreate. So Michelle, welcome to our webinar tonight. How are you?
Thank you so very much. And listen, thank you everyone that's online. I'm doing wonderful. And I really appreciate being invited back to partake, in this journey.
Yes.
This financial journey that we're
That's
on.
what it is. It is. It's not a destination. It's a continuous journey. And I love the way that the journal even breaks that down. There's layers and levels, right? So we want to continue to give people tools during that journey. And so at the live workshop, we kind of went through the first 2 or 3 parts of the journal. And just to give you a quick recap, I hope everyone can see my screen here. This is the financial journal. Everyone should have a copy now. If you don't, again, you can go to currencyconversations.com and download your own free copy. Like I told you, I print my copy. I have it in a binder, and I'm taking this thing serious. I'm trying to write it down and keep myself accountable here. We went through understanding your goals. We talked about some of that in the room, and you ladies went through, hey, what are some of the things that could be holding me back, or just being honest about where you are and putting those pieces together. And also as a recap, we looked at who are those people that impact how you look at money, whether it's grandmama, mama, auntie, spouse, whomever. And so being honest about who are my money influencers is what I'll call them, whether good or bad, money influencers. And then on last week, our first webinar, we talked about SMART goals. And I did get really specific, and I'll share candidly 2 of mine, which one of them was tonight's topic, which is credit and debt. There are some things I want to do personally going into 2020 is to rebuild my credit score and to eliminate debt, and simultaneously do both at the same time. So, and the second one is saving for a vacation, because I haven't taken one, and I realized, this journey is not necessarily about depriving myself, but being smart about how I make those decisions. And so those are the 2 that I wanted to share with you all. Anyone care to share the SMART goals that they wrote on their sheet? I mean, if you feel open to, remember it's judgment free, and we're here to support one another. So anyone want to share a SMART goal they wrote down on their sheet from last week?
Sure, I can share.
Thank you.
Hi everyone. I did not make an actual SMART goal, but this is my financial goal for 2020. Okay. So I looked at my net worth after our conversation last week.
Okay.
And Ariana's on the line. We had this conversation Saturday after the gym. But so one of my 2020 goals is to eliminate some of the debt that I have. So my car loan, because I had to buy a new car this year, So get that down by $5,000. And then I have about $31,000 in credit card debt right now. And so I want to get that down, $15,532 to be exact, if we have. So really, total debt reduction for 2020, I want to pay off $22,829 worth of debt.
Christine, you know, I gotta commend you, girl, because you got down to the dollar and you had to really look at it, right?
Mm-hmm.
So I'm assuming you went and collected this information, like whether it was from your budget, whether it was looking at your bank accounts or opening those bills, whatever it was, correct?
So I have all of my debt on my budget sheet. I have it broken down. It's real crazy. But anyways, what I will say though is I will commend myself because my net worth is actually only minus $8,388. So from a savings perspective, annuity, Roth IRA, 401k, emergency fund, I was very proud to see that I had amassed some savings there. So I was like, okay, well, I can get myself back in the positive, get out the red for the net worth, but definitely some goals with the savings as well for next year.
Girl, you are on top of it. You gave me something to strive for. And I'm gonna be honest, I did that once like a long time ago. And it's a scary thing because sometimes we imagine that it's probably worse than it really is. It's not as bad as we think. So girl, bravo, just for taking the lead and the courage to share it here openly. That's very transparent. So for those of you who are listening or catching the replay, just know, hey, that takes some guts. And the fact that she's working on it. So we know it's not going to stay in the same place of what she said today. So Michelle, as our financial expert on the line, do you have any thoughts or tips to share when you talk to customers or advise others about just knowing your current status and setting a goal to move forward?
Yes, actually, wonderful, Christine. I have to applaud you because one of the first steps is knowing where you are. Once you do your breakdown and once you do your goal setting, you basically have to know where you are in order to know how to start. So from there, it sounds like you've already did your budget breakdown, and then you want to get basically goal oriented, right? You want to know where you want to be using the SMART goal segment, being specific, make sure it's measurable, because you don't want to set a goal that's unreasonable. So you want it to be achievable and appropriate, and then set a by when. Basically think about how long you want to achieve that goal. So that is going to be your next step. And I like the fact that, like you said, Melissa, it's, you want to go travel or whatever you want to do. I mean, there's different ways to keep you on track. Do things to keep yourself on track, like maybe a vision board.
Yes.
With the, put everything that you want to achieve around you, so you can see that and speak it, talk about it to yourself, and talk to your spouse, talk to your family, so they understand that you're now going to spend mindfully. You're not going to what we call that mindless spending, where you just swipe that debit card, because you have a goal and you want to stick as close to that goal as you can. So it's going to take not only your effort, but the other people around you. They're going to have to help you. So you're going to basically let them know where you are, and and what you're trying to achieve, so you can get the respect from your family as well.
I like what you said. Michelle, you are always good for a quotable moment. You said to spend mindfully. Yeah. And we talked about that at the workshop. Marvelicia was talking about, going straight to cash on everything she spent, because you're gonna feel some type of way about breaking that $100 bill, or just, you know, oh wait, I know I set this budget limit. Like mine personally, I have budget limits set for categories with my own Chase account. And I have to be honest, like when I get that little text message or email that says, hey, Melissa, you're within that range, I set myself like within 20% range of my budget cap. It's like, okay, girl, it's time to stop. So being mindful and not ignoring those signs. And that's because you gotta look at it. And that's one of the things I want to address before we get specifically down into the tools for credit and debt. And I'm being honest, this is our zone for transparency. For the longest time, like I knew I would get bills for things I owed and I just didn't want to deal with it, so I wouldn't open it. And I feel like I'm not the only one. I'm not going to ask y'all to confess or tell on yourself. But a lot of people do that. They think, oh, well, if I ignore it, it's going to go away. Not so. Yeah. You actually empower yourself the moment you open that envelope, the moment you open that email, the moment you answer that phone call. Because a lot of times, like, they want to talk to you. They want to talk through it, and they respect the fact, especially if you're armed with information on how debt collection and things like that work. Anybody else want to share one of your SMART goals before we get right into the credit and debt tools? All right, so we'll keep it moving here. So here's the slide. I think this is on page 10 in your financial journal. So if you want to dog ear this page, this is our theme for tonight, credit and debt management. And so I love the fact that you can actually add a checkup date in here for your credit journey. And I did do this. I put a date once a month where I'm going in to check. And there's some very specific actions that I keep a list of. One of those may be, hey, call a credit or a collection agency and either make an arrangement or pay something off. And I started chomping down from my smallest to my largest. That's just personally the way I chose to do it, so it wouldn't feel so monumentous or just impossible. So that one day a month is typically at the beginning of the month, because that's when I'm writing out my bills or updating my budget. And again, you don't have to be a Chase customer. You do not have to commit to Chase to use these tools. So the credit journey, I'm gonna show you really quickly. I think I opened some of these tools here. So if you can still see my screen, this is what it looks like. You can enroll here. And my favorite part of this is that I get a free credit score, so I can look once a month and go back and see. And then also alerts for critical changes. And I don't know about anybody else, but I've been a victim of identity theft, identity fraud. It actually happened to me less than 30 days ago, as a matter of fact. Chase sent me a text message because of a transaction that looked, out of character for me. And I was able to text them right back and say, no, that's not me. It was an online transaction. Somebody trying to book travel. They're booking a trip without me, with my money. So, those tools are there. If you don't have those kind of alerts and precautions set up, do it. I used to tell myself, well, I'm not a wealthy person. Why would anybody want to steal my identity? Or I don't have a whole lot. Why do they care? Well, hey, we have to be a little vigilant in protecting ourselves, because that's just it. They're counting on the fact that you don't care and you're not looking, okay? And also, this is something I didn't know, that your score refreshes weekly when you log in. So if you want to log in weekly, you can. I don't want to obsess over it. And then the score simulator. That part is my favorite. You can put in different scenarios here and say, hey, if I get a credit, if I apply for a credit card and it's a hard inquiry or something, like, how is this going to affect me? If I go get a pre-approval for a house, how is that going to impact my credit score? A lot of times we think we know, but we don't know for real. And you can simulate these situations in there. Michelle, do you have any insight you want to share for us on the credit management tool, or this credit period?
Well, those are great. Those tools are the tools that we actually refer clients and non-clients to, because like you said, we talk to anybody when it comes to the credit, and our credit simulator is available to absolutely everybody. Chase.com/credit journey. But basically, kind of a rule of thumb is you have to, number one, of course, know your script, know your credit score, know what it is. And even on the credit journey, it'll tell you what's healthy credit, you know, because the healthier your credit, the more credible you are when you want to purchase things, or, you know, buy a home or buy a car or whatever. And then your payment history is very important. So you want to make sure, you know, as far as paying on time, and, you know, and knowing what you owe, and the length of your credit history actually plays a part also in your credit score. And the types of credit that you use, that also is figured in your credit score. And then new credit. So one thing we do like to advise is that, you know, you want to, there's a point system out there in your credit. The credit journey talks a lot about that. There's a point system. All of these things are going to play into your credit score. A rule of thumb is that if you have unsecured credit, that's really big. Now, those are those credit cards.
Okay.
Those are the credit that's extended to you where there is no collateral involved. Those have the highest credit ratings. Those you really want to be mindful of. And you know, you want to pay those off as soon as possible. You want to, if you can, pay them off within 30 days. If not, pay a little bit more than the minimum balance, because the rule of thumb out there for unsecured credit is 30%. You want to, that's your mark. That's basically your threshold. You want to make sure that you don't have any more than 30% of unsecured credit out there.
Okay. That's good. I'm trying to, ladies, I'm trying to kind of help you with the note taking here. So you should also get a copy of these notes in the chat feature. I'm trying to catch all the nuggets Michelle is saying. So you mentioned that there are types of credit, and one of those types, or the most highest rating one, is unsecured credit. Any other types of credit we need to be aware of?
I mean, then there's credits that's like, you know, your automobile, your auto loans, your mortgage credits. Those do affect your credit score, and they're going to be on your credit score for quite a long time, either the 15-year or the 30-year. Those are going to have a little, you know, the lower interest rates. So what you want to do, if you can, is stay away from the high interest rates. There's also credit from, you know, hard money lenders. You want to try to be careful with those if at all possible. And if you do find yourself in a situation where you do you know, you're above the 30%, you may want to do a consolidation, you know, and you just want to make sure you pay them all on, you know, all as agreed, without missing any payments. Okay. But basically mortgage, unsecured debt, and automobile debt.
Okay. So I'm going to open up. I know I have my list of questions and I can reach Michelle anytime, but ladies, I want to give you an opportunity. This is your chance in a more private setting here to ask her questions that you may or may not have had a chance to get to when we were in the room together at Currency Conversations. Any questions about what she just shared? Here's your chance to get some of those things answered, because she hit on some stuff. Don't be shy. Or if you're not comfortable asking it, drop it in the chat feature. So at the very top, you'll see chat, and you can send it directly to me or to the group. Trust me, there's no such thing as a bad question, a crazy question. I'll just ask one if no one else is going to speak up. Michelle, you mentioned about keeping your interest rates low, and people tell us that all the time. Oh, you want something low interest, but if you have a low credit score, and the probability that if you are approved for something, it's going to be high interest. How do you put yourself in a better position to get a lower interest rate?
Sure. Absolutely. The way credit works is it's basically something that's earned. Good, or the lower interest rates are something that's earned. So if you're new to credit, you're probably going to get a high interest rate, which is really which is the most important part of that, is making sure that you have a good payment history, and that you pay on time, pay it off as soon as possible. And then at that time, you do have the opportunity, the length of your credit, you're going to have that opportunity to reduce your credit. Credit card companies do it all the time. You can call them and say, hey, I've had a credit card with you for a year. I've paid as agreed and I haven't missed one. Do I qualify for a lower interest rate? And they actually will do that, as well as automobile loans. Even with the auto loan, if you've had that auto loan for a year or 2 years, usually it's about a 6 or a 7 year loan, and you pay as agreed, you pay on time, missing absolutely no payments, you can actually call and say, and request to refinance your car, so you will get the benefit of that lower interest rate. The lower interest rates are, they're exclusive to pretty much people who have credit for quite a long time, and have they've paid as agreed. So it's really, the history. All of that falls into the history of how you pay your credit and how you pay back, or your repayment to those debtors, that's going to get you those lower interest rates. So, we've all started off, and I started off with higher interest rates. However, going, as time passes, then you will find yourself being able to qualify for those. So that's always an option. And a lot of people don't know that.
That's so good to know. I'm watching the chats for you, Michelle, as some of the ladies are commenting. So, Andrina, thank you so much. Yeah, it's okay if you missed the beginning part, ladies. I am recording this session, so you can go back and watch it. I definitely expect that this is going to be a process. It's a journey. So if you need to go back and watch it, take more notes, rewind it, you can totally do that. And then you also said you've been doing this for 6 months. That's phenomenal. So I definitely commend you on starting that with, keeping this habit for 6 months or longer is a good place, and you should start to see some traction from that. Anyone else have specific questions or comments? And you're welcome to take yourself off mute and share out loud if you would like to.
I definitely was going to ask about that interest rate. Thank you for sharing that, Michelle. When you typically call and negotiate a lower rate with the credit card companies, is that something that they will maintain throughout the length of your account, or is it just typically that they'll set it for a set period of time?
That's usually something that will stay with the loan once you refinance, or you basically rescore, or lowering your interest rate on a credit card. That is through the life of that card. You've earned that. Basically what credit card companies do, and not only credit card, just lenders period, what they do is they need to see a history of how you repay. Okay, so usually they can't really basically ascertain how you handle credit. It's usually like a year, 12 months, 9 months to a year. They basically are looking at the history, and that's all basically they have to go by. They're trusting how those cards and how your loan payments or your home payments or whatever is being paid is being repaid back as debt. So they need enough time to be able to see that history. So that is why it's so important that we do, pay on time, even if it's an automatic payment, or you're just paying it at a certain date. But yeah, when you do get that lower rate on your card, that is the rate that you would have throughout the duration of the card, as long as you have it open.
That's an excellent question.
Great
You
question.
guys on a roll tonight. Well, I'm going to show you one more thing here. Also, and this, again, these links, I will include them. See if I can drop them here in the comments so you can save them for yourselves. Perfect. Okay. So also in your journal and on the currencyconversations.com website, there should be a link here to myfico.com credit education. Y'all, I was blown away. Like I spent some time preparing for you tonight, and I went through and watched some of these videos. Even like I said, one of my SMART goals was to work on rebuilding my credit and eliminating debt. It's educating you about FICO score. It's not all what you think it is. We have to demystify some of this. We touched on that again, where we're like, well, my mama may have said, you know, ooh, don't mess with credit cards, it's bad, or, you know, or no credit is better than, you know, having a credit card. And that's not necessarily true. Like, if used wisely, it's a very good tool. Remember, it's a tool, and we have to just learn how to use the tool the proper way. So watch these videos. The one thing I do want to hit on tonight, because again, credit and debt, you can, let me X out of this here. You can get your score for free here as well. And here's my question to you, Michelle, and we can do all these different simulators. I want to just challenge you to use this between this week and next week and set some things up, because we're coming to the end of the year. It's the end of 2019. We're approaching the holiday season. And I want to find out if some advice I was given was true, Michelle. I was told that this time of year is a good time to dispute accounts or to write in letters to have items removed from your credit, because they have to respond in writing within 30 days. And oftentimes that process is slowed down around the holidays. But this is a very, very busy time where people are writing in and disputing and trying to clear up either items they want to refute or have removed. Do you have any thoughts or a school of thought on that?
Well, not really. I guess I mean, if you really think about it, that could be the case, because credit is going to report like 30 days out. So if you want to dispute, but I would think that, I mean, if it was, you're saying basically a legitimate dispute.
Yeah, well, yeah, absolutely legitimate dispute. But you know how,
Yeah.
like, one thing we've been seeing, and I mean, you may or may not be able to speak to this, but I'm sure I'm not the only one who's noticing there's been a big emergence of people that say, hey, I'll repair your credit, or all these credit repair. I almost feels like, I don't know if it's multi-level marketing, but a lot of them are saying, hey, you know, this is how you can write a letter and get stuff off your credit or whatever. And I'm just making sure we're very well informed of the proper way to do it, I guess is the point I'm getting at. And, you know, the proper way to write the letter, to send the letter, not just disputing stuff just because we don't like this on there, but it's legitimate debt, but how we go about it the right way.
Yeah, that is not something that, I mean, I have heard people say that, you know, because they kind of take advantage of the 30 days, but that's really not something that, you know, we speak to.
Gotcha.
Yeah, that's
Okay.
really, you know, that's not something that we speak to or advise on, because I don't really have, you know, any advice on that.
And that's fair. And I bring
Yeah.
it up, and again, these are all we hear so much information out there, you know, and it's like,
I've
well,
heard.
what's true, what's not. And you know, these are tools. That's why we're trying to equip you and educate you and empower you so you can go right to the source of this information on MyFICO. I mean, this is how they're accumulating your credit score. Michelle, any final thoughts you want to share, or tools as far as debt management, or some advice on how to pay down debt?
So
Okay.
that is actually a great question. It really is. I mean, sometimes it seems so overwhelming because you know, sometimes, you know, we have a lot of debt and we, you know, we say, where do I start? Basically, so if you had 5 credit cards, so you want to start with the highest card, okay? And you want to pay extra, Okay. You want to pay more than, you may want to pay twice a month. You can always pay more. So you just start with one at a time. And as you are paying while you're keeping, you're paying, making your, if you're making minimum payments, or if, you find yourself into a debt crisis and you want to decrease your debt or get out of, the financial crisis that you're in. So you're going to continue to pay the other four, but you're going to take your highest one first, and you're going to pay extra to that one and do one at a time.
Okay. So transparent moment. I told y'all at the beginning of the call, like I was paying off the small things and climbing my way up. No, Michelle's like, just eat the elephant, tackle the big one.
Yeah, tackle the big one. Tackle the big one. Because if you start with the large one, if you think about it, if you start with the large one, what you're doing is you're really decreasing the highest credit card, even if it's like, say it's over 30%. Okay, you have over 30% of that as far as your line, or you're maxed out that line. So you're basically putting yourself in a better position to move your score, basically quicker if you tackle the highest one first.
I like that. That's a good, see, she's opening our minds here, ladies, on how to deal with debt. We talked about credit, so the floor is open. Anybody have questions about this whole debt thing? We don't want that shackle to feel too weighted. We want to help you eliminate that. So now's your chance to ask those questions. Any questions for Michelle on the debt piece? All right, so I'm gonna send a quick poll to the group here. Right now, if you can still see my screen, I have it listed. There's 3 really quick questions. I want to get a gauge of the group because we have one more webinar left. And I'm one of those people, I'm in it for the long haul. I believe in the marathon of it all, honestly, where it's like, hey, we're not just doing this because it's a popular topic or whatever, or from a social standpoint, but this is very honestly a lifestyle. That's why it's called the Financial Journal and Journey. So I just want to figure out after next week, what do you need next? So we put you in touch with the right people, whether it's Michelle and the resources she has through Chase, whether it's Erica Estrada, who is one of our other panelists, who is a CPA. She has personally helped me with the financial planning piece. And, I own 2 businesses, and she helped me figure out the whole tax breakdown and dealing with quarterly, assessments and things of that nature, just whatever the case may be. So I'm going to launch this poll. I'm going to give you 2 quick minutes here. And I want to see how we do with this. So you can answer, it's anonymous here. Go ahead and click, and we're going to gauge the group here. So you should have gotten a little pop-up about the poll. So go ahead and answer. I want to engage the group so we know what to focus on, okay? So you are using the journal, that's good. I want to make sure that you're not just jumping on and not using the tools here. So savings, paying off that investment is all okay. The only thing we haven't touched on yet is investment. So thank you for letting me know that, because next week we talk about asset protection, but maybe we can slide some investment conversation in there. And Michelle, if you have any tools about investments, whether it's with Chase or not, that you want to share, by all means, because I got 2 people saying they want to know about investments. This is good for me, so we're going in the right direction. And everybody said they're on here because they want accountability. Good stuff. All right. Investment seems to be the hot topic, Michelle. Any final thoughts to share on it? And that was like a unanimous, like, I want to invest. So any final thoughts about it?
Investing is great because when you start talking about investments, you're talking about the future, you're talking about retirement, you're talking about your generational wealth. One thing about investment, if you do have I know at Chase, we have financial advisors that are in our office
Mm-hmm.
The one thing, the first step is to speak with the financial officer, wherever you bank. They have a whole profile that I know in Chase it's free to you, to our clients, and in most banks it probably is. They actually do a whole prospectus on all of your finances, and then they basically will work with you on a realistic goal and an amount that they would suggest to you that you could invest. Okay, whether it be a 401k or whether it, is going in, brokerage or something like that, or if you have children, 529s, putting away for their college and stuff like that. There's so many different avenues that you can take when it comes to investing, and investing is very important, and it's very important to start when you are as young as you when you're young, basically, because what that financial advisor is going to, after he or she does your entire prospectus, they're going to say, hey, you have X amount or percentage of your money that I think you should put aside. So
I like that.
Yeah,
So
that would be like the first step.
Just walk in and ask to speak to a banker, right?
Yeah, if you walked in to speak with a banker, that would be great. But what that banker would do, would unless that banker is an investment representative, that banker would be able to help you or get you to the right person.
Okay.
I advise everybody to do that. Yeah.
So that means, guys, I'm gonna be the first one. Okay, y'all can see me, so I'm telling y'all. We said we wanted accountability. So as we wrap up, this is your chance to hold me accountable. Michelle is the VP at the branch where I bank. I am going to put on my calendar to go back and speak to her or one of her investment bankers, because I have not done that. Okay, I've done that before in the past, but my circumstances in my life is different than it was, say, 6 months or a year ago. There were some investments, during the time where I was in my business, and I needed to tap into those. I need to reestablish some things. I have a new job I started 5 months ago with a new 401k plan and a totally different income. So when life changes occur, it doesn't hurt to take another look at that portfolio. So Michelle, I'm holding myself accountable.
Yeah.
I am going to go, and I am going to share that journey with y'all this week. That's my assignment to you all.
Wonderful.
So as we wrap up, guys, just pour out some comments here, show Michelle some love, because again, she's totally doing this out of the goodness of her heart. We thank you. We appreciate you so much for your time, Michelle.
You're
Michelle
welcome.
Chapman, again, one of our panelists from Currency Conversations, and she's located and if you're local in Atlanta, she's at the Edgewood branch over off of Moreland. So give her a shout, pop in and see her.
Thank you, Michelle.
Yes, you're welcome. Come see me anytime.
All right. So before we wrap up, last week, and forgive me, I popped off maybe too soon for some of you. You were still trying to partner up. Some of you got a partner, some of you did not. Okay. So I'm going to leave the webinar open for a second. I'm going to stop recording and I'm going to leave it open because I want you to have an accountability partner. And I will stay on extra. If you didn't get a chance to talk to your partner, let me know and I'll pair you up together. Because again, you said you got on here for accountability. So I want to give you a space here where you guys I can put you in a private chat room. You can talk to one another, exchange information with one another, and go from there. So Michelle, you are released. Thank you so much for your time.
Thank you. Thank you all.
Yeah.
Thank you very much.
Ladies, you're welcome to stay on, and I can put you in a private group to connect with your partner. All right, so give me 1 second.
Thanks, Melissa. Bye, ladies.
Good night, all.
Okay, did you want to connect with your partner or have you already done so?